We are joined by Brijen Puri from JP Morgan. He joins us to give a sense on the Indian rupee for the near term and the long term of it. Brijen, hi, thank you so much for joining us. How do you look at the Indian rupee performance in this current month? Down nearly 4%, the worst or the second worst performing currency in Asian markets right now?
Rupee, we've seen significant headwinds on both the current account and the capital account. So we've had a strong current account deficit. Capital account has not been helped by the political stand as well as the tax amendment laws, the proposed ones. So fundamentally, dollar rupee does look weak, and which is where we've seen dollar rupee move up materially over the past month or so. We think that going forward, in the long term, the headwinds do continue because really what could provide some succor to the rupee would be one, reduction in oil prices, maybe into the 100-110 range on Brent, some more clarity on GAR and how that would impact the markets, and some pass-through of oil prices into the domestic market. So unless we see those coming in and therefore indicating a break in the quote-unquote policy paralysis that we've seen from the government, we think the pressures would continue and we could head higher. Having said that, in the short term, we could see a technical pullback, maybe 1% or 2%, given the speed at which we've moved up. But I do not think that is something which people will be looking to really buy rupee into unless we see the fundamental factors changing materially.
Which doesn't seem anytime soon, Brijen. But seeing the rupee choppiness, we have come down from 48, 60 kind of highs in Feb to 50, 260 right now. So 4 rupees of a decline in last 2 months. And there's not too much of a central bank intervention also coming in, given the liquidity crunch that we are into. So how do you see the RBI or the central banks looking at the rupee?
See, I think the RBI would definitely look to intervene should we move fairly fast into the previous highs, but I don't think they would want to, and neither would they have the capacity to hold on to any particular level. They would just be looking to smoothen the moves and to ensure that whatever moves we're having are more fundamentally driven, and to try and reduce the spec element in that as much as possible.
Brijen, in that sense, where do you see the rupee going? Because UBS says 56. There also is the old JP Morgan report which is pointing at 55. We have seen a record low of 54.30. So according to you, in coming 3 months or for the rest of the calendar year 2012, how are you working with the rupee?
Like I said, later this year, I would not rule out fresh highs for the dollar rupee unless we see a material change in the local factors.
Right, Brijen, do you expect some sort of a technical rebound for the currency at any point in time to take us back to closer to the 50 levels or even breach past that? Because what we saw from December to Feb was a strong rebound once the currency hit 54.30. Do you see that happening in the interim, or will it be just pressure from here taking it downwards to its record lows?
That's distinctly possible, and all of that would really be dependent on the global risk sentiment, because for now that really is the only thing which could help the rupee. Rupee would yet remain an underperformer relative to its Asian and other emerging market peers, but we could see some correction. However, I'd be surprised if that correction takes us down below the 50 mark unless, like I said, we see some fundamental changes in the local outlook, and any dip into the 51s, I would suggest, would probably be bought.
Brijen, another thing is the S&P outlook. The downgrade of that coming into the Indian markets also seems to be weighing on to the rupee. How are the international markets now looking at India and the Indian rupee? And also, we have talked about the domestic factors. Would you say that whatever is happening in China in sense of slowdown, also the economic concerns in Europe, all of that would also continue to weigh?
Well, yes, definitely. All of that is weighing on the global sentiment, so which is where people are cautious on risk, and the S&P downgrade doesn't help much. Of course, the S&P is not saying anything which the market did not already know, but a potential downgrade from investment to non-investment grade could really force the hand of many an investor who have rating limitations. So that is something which could happen. Of course, we don't expect any of that to happen in the immediate term. The S&P themselves have said that they would be watching the situation for some time. So that's something which we hope to see some improvement on from the policymakers.
Brijen, morning. Neeraj here. Just wondering, we were talking to a few fund managers who talk to investors based out of US and Europe. And almost every conversation that they had with those fund managers or people who deploy money in India had to say that because of the lack of clarity on the GAR issue, what happened with Vodafone, so on and so forth, they are not going to allocate fresh allocations to India as an entity. Sure enough, regional allocations and India will find some favor. But if that's the view that continues, say for the next 6 months, assuming that there is no clarity that comes in, is that a big dampener for the rupee, or you think that will be taken in stride?
No, that definitely would be a dampener because, we have a large current account deficit and we need capital to fund that. Given the Vodafone GAR case, that impacts potential FDI, given and the FII. So unless we are able to attract FII, funding our current account deficit would be difficult, and a negative BOP would really only help pushing up the value of the dollar rupee. So attracting foreign capital is important, and at least given the news bites that we've seen in the over the past few days, we do hope that we will see some clarity sooner rather than later on those issues.